There is more education needed, and I think doing things on an embedded basis is going to accelerate that education. It's going to make consumers and businesses more aware of the options they have.
Right.
It's going to meet them where they are today, where the businesses have already scaled and network effects have been achieved through insurance company policies on the indemnity side. But there's really this opportunity to enhance that journey. And I think other ecosystem participants will see that over time and be more ready to adopt those solutions as an acceptable alternative as the traditional market moves in a higher fashion in wanting to raise deductibles or maybe limit some coverages that they historically have offered.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes.
Sam Broomer, thank you so much for joining me here at InsurTech Hartford Symposium 2025.
Happy to be here. Fabulous, good energy, good conversations. Looking forward to this one too.
How's the conference been so far?
It's been fabulous. You know, we didn't kick off till 1 o'clock today, but I was up super early, had some fabulous conversations, had a wonderful lunch across the way with some old friends.
Okay.
And a lot on tap today. So looking forward to keeping into it, getting into it some more tomorrow as well.
Awesome. So what's really fascinating, Sam, about your role and your company, Norman Max in particular, is that you guys are at the confluence, I think, of two really interesting terms that are new to insurance. When I say new, kind of relatively, we're talking about embedded and we're talking about parametric.
Wow.
Right? That's like don't you give me too much at once, right? No, and I love this. And I've been enthralled with the concept of parametric. I told you I met with Daniel Turgel, and kind of got a great education from him on this whole piece here. But now let's talk about embedded parametric and where that opportunity is going to take us.
Yeah, I think there's amazing opportunity in parametric, and I really got to this business because I thought there was an opportunity at the intersection of availability and affordability of insurance relative to tech and climate.
Okay.
Climate being that disruptor, tech being a great enabler for where we are today, and this availability and affordability really getting to frequency and severity of weather events.
Yeah.
Economic losses are increasing, insured losses may be decreasing. Okay. So a real opportunity to look at this product in a different way. Parametric historically, when it really first got started, was like something you would find in the farming community, something that the World Bank was working on, something that the United Nations was working on in developing countries, really important work at that point in time. It's now a business really where you have sophisticated brokers, sophisticated buyers in the risk management space, buying very large limits for very, very big events. I actually think there's an amazing opportunity to take this very complex product, or what might be viewed as a complex product.
Sure.
Actually, it's quite simple the way it operates, but it's new terminology.
Right.
Hey, even the term parametric is something new.
Right.
So one of the objectives I have is to find a way to make that term a bit softer.
Sure.
A bit more available, a bit more adoptable, a bit more friendly. And can you imagine doing that in the insurance business? That's the objective.
I hear you. It sounds complicated and scary to someone who's not in the business, right?
Sure.
Yeah.
So I think there's something here to be done around, taking these products, these very bespoke, unique products, and turning them into features. Features you could find in every commercial property policy and homeowners policy in the country.
Yeah.
Now hold me to that. We'll see if that actually happens over time. But imagine taking a limit, a small limit, let's call it $5,000 or $10,000, embedding that through an enhancement endorsement into a homeowner's policy, doing it across a portfolio at a very small cost. And what does that solve for? Well, that gives the homeowner the benefit of covering their deductible.
Right.
If you're in certain parts of the country, you have a wind deductible. Everyone has a property damage or liability deductible. And those have only gone up over time.
Right.
So when I first got in this business, there were people with $500 deductibles on their homes.
Right.
That's a $5,000 deductible today.
Exactly.
Wind deductibles at 3%.
2%, 3%.
5%.
Yeah.
I was with somebody last week talking about a 7% wind deductible, which actually doesn't make you eligible for a tier 1 lender mortgage.
That's right.
Which is a real problem. So I think on the homeowner side, we can solve for the deductible problem. This does a whole bunch more, by the way. Covers things that are not covered as part of a traditional program. It is very quick and very expedient in its payment. I think it can enhance customer satisfaction, help change the tide of the conversation around my view of insurance, the country's view of insurance, which is typically a negative view.
Right.
I think this feature could be a great enhancement that enhances that customer experience for the end consumer.
Interesting.
And does so by getting these dollars in their hands very quick after a hurricane, earthquake, or flooding event.
Got it.
So that's the embedded thesis on the homeowner side.
Okay.
Solving the deductible problem, doing it at a very, very low cost, doing it in a customer journey the customer and the insurance agent or broker is used to today, and doing it across the country for those three hazards. If you look at the use case on the commercial line side, we already know kind of where it's been. The agricultural, the farming business, right? That's still some opportunity. The high-end kind of risk management business. But can you imagine doing this in the middle market business, right? So there is a real growing exposure for business interruption without physical damage.
Okay.
I started off by talking about economic losses widening relative to insured losses. And part of that is business interruption. So the example that I've used before, and we're not in the wildfire business today, but we all know what happened on the island of Maui. There was a horrific wildfire. Folks were devastated. It was just so bad for that community. In parts of that community, the hotels, which are on a certain part of the island, were relatively okay.
Sure.
But, you know, they were returning deposits. People were not flying to Maui. They were deferring their vacations. There was this very large extra expense and business interruption component that was on their nickel at that point in time, not insured. That was further compounded by the fact that all of their employees were impacted by the same event.
Right.
So whether you're an employee that lives at the hotel or you're an employee that lives on the island with a family, everyone around you is decimated. At the same point in time, the hotels have 100% capacity. That is where people are going for refuge, for help.
Right.
So having staff available is really, really important. And to make that happen costs extra expense considerations. And then finally, because you're on an island, you have supply chain considerations. Some of those were diverted for humanitarian reasons, which means supply chains were disrupted to those specific businesses. So that was a confluence of risk that created this real business interruption challenge without physical damage. Economic loss without an insured event. So I think for a decent sized limit, call it $50,000, $25,000, $100,000 in the middle market space. Sure, you could solve that same deductible challenge. They have that benefit. Sure, you're covering other things that are not covered today in traditional indemnity products. And by no means am I recommending that this is a replacement for that. But imagine the opportunity to give a business owner in the small commercial middle market business the opportunity to cover business interruption where they didn't have that coverage before without physical loss.
I want to ask you maybe a remedial academic question. When I think about Parametric, what I've learned is that that there actually doesn't even need to be necessarily a loss, just a triggered event. Can you kind of first validate that for me?
Sure.
And then my second question is, in the hypothetical that you provided, I also learned that Parametric requires or should have this kind of irrefutable data that you're tracking that tells you that the event triggered. So how do those, first off, clean me up if I'm wrong on any of those, and then how does all of that apply to that hypothetical you just provided?
Yeah, I think you have a good knowledge actually, so I don't think there's anything to clean up on this one. So that is in fact true. So there typically is an oracle or data that's provided by a third party, which validates whether a loss did or did not occur. And the loss is actually the occurrence of the event.
Just the occurrence.
Not of the economic loss. Now that event may have created an economic loss for you. You may have egress and ingress issues, meaning you can no longer get across the bridge to go to work. You could have loss to your pool, your dock, your seawalls. You could have food spoilage. You can actually have physical damage. All of these things could occur. But the triggering for the event is not the actual physical loss adjustment, but rather the occurrence of that event as validated by this third party. And to give you an example of that specifically, in our hurricane product, we have a 3-trigger offering that we offer our consumers and businesses. We think that's really important because we want to eliminate something called basis risk. Meaning an event occurs, you have damage, but you do not have a recovery. We want to make sure that if the event occurs, that you have a recovery for that event. So this triple trigger that we have for our hurricane event is a series of hurricane hardened anemometers. Can't believe I said that right the first time.
Well, you're gonna have to tell us what those are.
So for sure. So an anemometer, second time, are devices that measure the wind speed. 60-second sustained wind speed. Right, that measurement takes place through these devices. They're drilled really deep into the ground, and they measure along the coast, what that wind speed is. So we have these devices that take us from Texas all the way up the East Coast, and that is one of the ways that which we measure wind speed to make sure that based upon where you are, the closest anemometer would be one of the potential triggers for you.
Got it.
The other trigger is a product that's put out by RMS,
Okay.
Moody's RMS, and it's called H-Wind. And that's a synthetic product that they create based upon a number of data sources that measures wind at any one geolocation.
Okay.
And that has an index associated with it as well. Hey, if the wind blows this fast, this is the percentage payout. If the wind blows that fast, this is the percentage payout. It's very simple. It's just different than what traditional indemnity policies are.
Yeah.
And then we have a third trigger, which is what you'll typically think of and see when you think about parametric. And I call that cat in a circle or cat in a shape.
Okay.
Meaning it could be a polygon, it could be a circle. But think about a 15-mile radius around your residence or a 15-mile radius around your business. And if the storm path or footprint crosses that at a sustained wind speed, then that also is a trigger for the policy. So you have those three triggers that are measuring the event. Did the event occur? And maybe it triggered all three of them. But the insured, whether that's a homeowner or a business, has the opportunity to select the highest payment that measurement provides them.
Fascinating.
So it's really meant to make sure that if this event comes through, that you have the opportunity for recovery. So these products are very much designed to make sure that we are covering those items that are important to the insured, and we're aligning the expectation of a payment at the time of purchase.
Got it. That makes a ton of sense to me. And it's really fascinating. Just that I didn't realize that there was products out there with three different parameters, with three different sets of options. But let me take you to an ecosystem question, because we were talking about kind of the high deductible option earlier in the conversation. So I'm picturing a scenario where I live in Florida, by the way.
Oh, nice.
So I'm picturing a scenario where I've been lucky enough to get an HO3 policy, but there's a 7% wind deductible on that, and then I've opted for a $5,000 just kind of general policy deductible. And Chase Bank says, no, that policy is not going to work. But then I submit to them my parametric policy that I've layered on top of that. Is the ecosystem ready to really interpret this combination of coverages so that everyone in the ecosystem, the banks included, are aligned to the coverages that are being afforded to the property?
Yeah, I don't know the answer to that question. What I would say is that there's probably more education that needs to take place. So this is not just an automatic, like, oh, okay, so you solve the problem in this way.
Yeah.
Now, the wind deductible relative to the parametric solution is a one-to-one binary answer.
Okay.
But whether the commercial entity is going to accept that for collateral, I don't know. So that's yet to be determined, I think, in the marketplace today.
Yeah.
And these wind deductibles have begun to move up most recently. So I'm not sure there's a lot of saturation in the market really to test that thesis at this point.
Got it.
But there is more education needed. And I think doing things on an embedded basis is going to accelerate that education. It's going to make consumers and businesses more aware of the options they have.
Right.
It's going to meet them where they are today, where the businesses have already scaled and network effects have been achieved through insurance company policies on the indemnity side.
Right.
Not that anything changing with that,
Right.
but there's really this opportunity to enhance that journey. And I think other ecosystem participants will see that over time and be more ready to adopt those solutions as an acceptable alternative as the traditional market moves in a higher fashion in wanting to raise deductibles or maybe limit some coverages that they historically have offered.
Got it. It just occurred to me that Sam, I don't know that we've clicked enough on embedded. We've spoken a lot about parametric, but I don't know that we talked enough about embedded. And so, just as a final closing thought, tell me a little bit about where all of the embedded opportunities exist for these products.
You know, it's funny. It's a great question. And I almost kind of wish we teed it up ahead of time. Like I knew you were going to ask me that question because that's literally like the best question. I love it. So thank you for this. Thank you for the softball. I appreciate that.
Yep.
So I think it starts off with bespoke writers, right?
Okay.
I think it starts off where you have specialty writers writing flood insurance.
Yep.
Or with consumers that buy the National Flood Insurance Policy. Or folks in communities where the wind blows and sometimes blows heavy and often. I think those areas, there is an awareness and an acceptance that Parametric is a very, very strong solution. They're aware of it, and agents and brokers are engaged in that business. I then think you move to MGAs and E&S writers. Okay. E&S has more flexibility in how they offer their products. So I think there's more regulatory tolerance to be thinking about these these enhancement solutions to indemnity products in those bespoke areas.
Got it.
I then look at that area and say, okay, what else could you potentially do? Well, there's so much happening in digital ecosystems today. And I think of one digital ecosystem, not to name any proper nouns, but they have an in-house agency. Okay, well, that's a solution for them. That's not necessarily embedded, but they're getting to learn the product.
Right.
They're getting to learn how it works. And they're applying it bespokely to customers that have unique needs. So that's one avenue. But within that same digital ecosystem, they probably work with 15, 20,000 other agents that are part of that organization, part of that digital access. So wow, what a great way to spread the gospel. Have some conversations about how you can help their insureds. Maybe they also write their own policies, in this case they do, and they do so with their own paper. So that's an opportunity to embed this solution as either an enhancement endorsement, whether it's automatically baked in with the bespoke offering or it's done as a separate piece of paper, but it's branded the company, right? We're void of this conversation. Interesting. And maybe that paper is also utilized as a front. So it's a hybrid third-party business they do program business through, and they want to differentiate their offering relative to other hybrid fronts. So we can include Parametric solutions in their core offerings and bring that through their other program writers. And then finally, in this digital ecosystem, they, through API, bring in other entities, like big commercial entities. Think the likes of like Progressive, right? We all know who they are. Allstate is something you mentioned before. So these folks have access to that ecosystem as well. What a great opportunity for an introduction and a conversation with them through the relationship they already have with this digital organization. So that's cool. I love employee benefits. I love community insurance. Right, we know there's a challenge with maybe the flow of funds, with governmental budgets, in protecting communities. I think on the employee benefits side, I think it's an amazing risk management and disaster recovery tool to help empower your employees during their time of need, to bring resiliency to your business. So 4, 5, 6 different ways I think you progress over time, ultimately getting to an embedded situation in the traditional admitted marketplace. Doesn't happen day one, might not happen day 365, but I think you have an amazing journey to go on to begin to educate folks, show that you can solve these challenges, and do it in a way that creates the less friction for them as possible, while proving yourself as you move through that opportunity chain. So ultimately, this becomes more of a accepted and solution you'll find in all of these commercial policies and every homeowner's policy in the country.
That's fantastic. Thank you so much. Sam, we were talking about embedded and parametric all together in the same conversation. I love it. Thanks so much for your time, Sam.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.